Well, welcome everybody. So glad that you're here with us today, and we're really excited about having our very good friend Percy Ihara. Uh, Percy has been involved in kupuna type things for, I think, you can correct me, Percy, but I believe it's over 20 years. He
20
was
since 2022.
2022. Well, see, I'm sure you've all seen the Generations magazine. That was his brainchild, and until just a little while ago, it was also his hard work. Now his niece is taking over the control of that magazine and doing a wonderful job. But Percy has done so much in supporting organizations who work with kupuna. He's been extremely supportive of the Caregiver Foundation and given us advice and kind of a kick in the butt once in a while when we thought we needed it. But he has a genuine concern. And we asked him to come on today and talk about this thing called reverse mortgages that we hear so much about. And we usually hear about it in a negative context. And let's listen to him and learn about the positive aspects and the potential that a reverse mortgage has in enabling people to age at home. So, Percy, thank you for joining us, and I'll turn it over to you.
Thank you, everybody, and thank you, Gary, and the staff and everybody. Yeah, I've been involved since 2002. My first session, I think I might have mentioned to everybody that I've been in finance since 1988 when I was 28 years old. I've been at Bank Hawaii, First Hawaiian Bank. I've done residential, commercial loans. And a friend of mine, when I was at Bank of Hawaii in 2000, he goes, "You know what a reverse mortgage is, right?" I said, "Well, I've heard about it." We all went to the federal building in 1990. It started in 89. 1990, I remember we all went to the federal building, about 100 of us, and we walked out of there 2 hours later going, "What was that?" Our head was spinning, how to get the concept. Why would people want to do that? How does it work? It just didn't make and it was called a reverse mortgage. Well, in 2002, when I offered to take the job, I did a research about the demographic of aging in 2002. And when I saw the demographic of aging baby boomers, let alone the baby boomers' parents, called the greatest generation, I took a leap of faith, and I've been in it ever since. I'm one of the few veterans still doing the reverse mortgage in the country. Most of my bosses, managers have been only been 5, 10, 15 years. Um, but so what happened was at 42 years old in 2002, I was sitting across seniors. I had a 401k, but I didn't do any retirement planning yet. I didn't know what a Medicare, Medicaid, Social Security. I never thought about long-term care, Alzheimer's, dementia, whatever, until so I realized I needed to learn. So I got my designation certified senior advisor, and maybe I can share my screen if that works. Can we see that?
There we go.
Okay. So by the way, I want to make this interactive, and so somebody can watch the chat. Just put in the chat any questions, comments you have. But I want to make this interactive. So I have my certified senior advisor designation. It's the only double accredited designation in the industry of finance and the industry of aging. And certified, I mean, accredited means you take a test, and nobody tells you what the answers are on the test. There's over 30,000 designations. Only 1% are designated, 10% are accredited. You're certified in long-term care. I got that a few years ago because all my clients stay with me till the day they pass. But before they pass, they need some form of care. So I got that designation a few years ago. So I wanted to understand. I only do reverse mortgages. I do not sell long-term care insurance. I'm not an attorney, financial advisor, geriatrician, a real estate agent, tax person, insurance person. But I want people to understand I'm well-rounded. I'm one of the few people in the country to have both these, in fact, the only person in the country that has these two designations. I think it's really important when you're talking about attorney, financial advisor trying to educate you or tell you what you should do. I did a workshop this morning. I was telling that same to a workshop attendees, and he goes, "Yeah, my attorney said, don't sell the property, don't put your kids on title." You know, another attorney might say the difference. Oh, you should give your kids now, and you can go on Medicaid. Well, there's a lot of different things that are going on in that world, that concept. But I wanted to make it interactive, so I just typed down. I did a workshop at Agent Place all in 1 or 2 weeks ago. and I was brainstorming things about aging in place because the reverse mortgage is simply a line of credit, a pool of money that you have access to that allows you to stay in the home for the rest of your life, guaranteed once you get it. Guaranteed, so you can never be foreclosed upon as long as you pay your property tax and the homeowner insurance. But when I talk about the reverse mortgage, it's really about if you want to stay in your home for the rest of your life, how are you going to be able to do that? So I just wrote these things down because this is what my career, I've done several hundred reverse mortgages that people ask about, or I ask them about, because reverse mortgage is just a tool, just an option to be able to accomplish all these items, there's line items. So I just want to go over these. And if you, like I say, if you have questions, put it in the chat, comments, because I do want to start off with the first question. How many people have heard negative things about the reverse mortgage? Probably all of you, right?
Mm.
I've done 4 sessions with the Bar Association. I did 45 attorneys 2 months ago. Almost about 90% were negative. But after an hour and a half with them, they all agreed it's potentially a good option, not for everybody. So I did want to mention, I'm a student of this business. I'm researchers in and out. I actually met, I was telling before everybody came on, I actually met the guy that did the first 2 papers for the federal government on a reverse mortgage. His name is Dr. Bing Chen. He's since passed, but he did a paper for the white paper in late 1960s and in the mid 70s, even though the reverse mortgage didn't start officially for the federal government 1989. However, people that are in the know, can you guys see that document there? The state of Hawaii studied using home equity for the seniors in 1984. And I found this online a couple of years ago to tell and show people that the state of Hawaii Office on Aging was looking at using home equity to stay in your home for the rest of your life. So it details out about 5 different programs around the country, including Japan had one. Nothing has lasted. So it's something that I think people should just kind of keep it in the back of their mind as an option. So really want to talk about if you want to, how many people want to stay in their home for the rest of their life besides me? I talked to my wife. I said, I live like 3 blocks from Arcadia. I said, I think it's a good idea. My auntie lived there. She had a great time. My mother-in-law lived in another place, had a great time. I said, once you want to live your last 10, 15, 20 years, you have to worry about cooking. I don't have to do the yard. I have to worry about driving so much. And a long-term care is all in one place. I said, let's do that. Maybe in our mid 70s. She said, go ahead, enjoy yourself. I'm not leaving this house. Uh, I said, oh, okay. I get that. So I was kind of planting seeds with her. That's how I educate and counsel families. I like to plant seeds about maybe this is an option because it's hard to imagine what life's going to be at. I'm 65 now. When you're 75 or 80 or 80, it's hard to imagine what life's going to be like. So I try to walk people through what really is going to happen. My workshops, by the way, is called The Realities of Aging. It's in the magazine, Generations. Um, so it's really about, do you want to live in your home for the rest of your life? Can you afford to maintain the condition of your home for the next 20 to 30 years? You have to re-roof, termite damage. Uh, you might have a 2-story home where you move down to the ground floor. Is there a bedroom down there? Are there stairs to the garage? It's really important to understand that that's why Project Donna does the fall prevention. They have somebody that goes out that I always, when I visit people's homes, I look for issues where people may fall down. Is it safe and secure enough? At some point, do they have to re-roof, termite the place? Are they upkeeping the home? And that's something that I think when I try to deal with and counsel with kids, that's really important because we all want to stay in a home. But I've seen a lot of homes. I've been to homes where there's mold for the last 20 years. Mold, that's a health issue. Termite damage, wood rot, dry rot, plumbing issues. it's just unfortunate that these kind of situations with the home uh, happens. And so just imagine to yourself in your own home, at some point you have to repaint, right? Um, one of the best things I did when I renovated my home a few years ago, I put a jacuzzi in my bathroom, which is actually relatively easy to do. Just got to hire somebody to do it. But people that have arthritis or back issues, I try to walk golf 9 holes, 3 days, 4 days a week in the afternoon. I should be there right now. Or I play softball twice a week. And I just started playing pickleball, but that's another story because pickleball, a lot of injuries in pickleball. Um, and a lot of local people, especially, are you property rich, cash poor? So what I mean by that, everybody when they retire, hopefully they, or unless they're still working, they have two forms of cash: your 401k, your portfolio, your stocks, bonds, IRA, Roth IRA, and then on the right pocket is your home equity. I every week I talk to people that are millionaires in equity. Just about almost every house this side of Eva Beach, Kapolei, is worth $1 million. But you can't touch it. You're sleeping on it every night, but you can't touch it. And at some point down the road, statistics show that 75% of the people are going to run out of cash by the time they're 75, 80 years old. So they're living on Social Security only. And that's a scary thought. And then when the healthy spouse is still around, the not so healthy spouse, most times the men, they pass away, is the remaining spouse going to be able to financially stand at home and have access to cash? So these are the things that when people look at the reverse mortgage, these are the kind of questions I still talk to them about. Number 4 item, 50% of my clients today still have a mortgage payment. And when one spouse passes away or when you retire, that mortgage payment is still going to be there. You know, I call this reverse mortgage the product of the future. I actually had dinner at my former mentor from the 2000s. He came to Hawaii. He is a pastor's son, and his last 2 years of high school, of all places, his father got from California, was relocated to Old Koloa Church in Koloa, Kauai. He went to his reunion last week. So he flew into Waikiki, and I got him a hotel room. I had dinner with him the other night. And I was telling this story because think about this. When the interest rates were really low in the last 10, 15 years, especially during COVID, what, 2.7, 3%? Everybody and their mother refinanced. But now all they did is expand out the term of the loan. And if you refinance in the last 15 years, you probably have 15 years more left on your mortgage payment. So that's something that people got to start thinking about. It comes down to be a cash flow problem. I'm doing a jumbo loan right now, right up the street from my house by Roosevelt, a $2 million home. They have a $450,000 mortgage payment. And $450,000, I think the mortgage payment, including tax and insurance, is like $3,000 a month. They're worried about running out of money. They're worried about dad who has early onset dementia. And they're worried about if he passes, mom's not going to be able to stay in his home with that big mortgage payment. So actually, the son is a friend of mine, referred me to them. And so now we're putting it in process. We get rid of that mortgage payment. They can live more comfortably. And the reverse mortgage, all it is simply deferred interest. So we are going to charge them an interest rate, interest every month. And they can pay any amount above $100 toward the mortgage payment. So it frees up a little bit of cash flow. We're not required to make a mortgage payment anymore. But is allowing the mother, to have less stress dealing with potentially running out of funds, because she's dealing with her husband has dementia, and she's pretty healthy herself, but she's got a big property. I actually went 2 weeks ago to help her clean up all the mango tree and help rake her yard because it was getting a little messy. But it is a fact. Number 5, people run out of money during retirement, cash, 401k. I had a financial advisor. I work with mostly financial advisors, and I had a financial advisor call me that his client ran out of $1 million in cash paying for his care. He had dementia for 10 years. Mm-hmm. And eventually what happens for financial advisors is that I educate them. Listen, once that portfolio goes down, there's nothing left. So we try to leverage the portfolio by using the portfolio and home equity, take out so you don't have to pay tax on money from the portfolio when you cash it out, and or allow some flexibility and allow the portfolio to still grow. Because once that portfolio of money goes, it's gone. It's never going to go up anymore. So we try to leverage it, balance it out better, because we're seeing more and more financial advisors come to me because the client ran out of money. And a lot of times the financial advisor had a negative attitude about the reverse mortgage. There's still some warehouse mortgage financial services companies that will not recommend a reverse mortgage. Um, and I get it. It's just they need to understand that they're going to lose a client down the road. We're going to live a lot longer than we maybe want to. And it's really important to understand longevity. Medicine is better today. Technology is better today. Our prescription drugs are better today. We're going to live a lot longer than maybe we want to. And it's serious. It's a serious situation when all our nursing beds and are short, our CNAs, not enough CNAs. And I love Arcadia. That's why you see the commercial. Their caregivers are promoting the commercial because they love their job. They need caregivers. And it's a great community to be along to. But it shows you the need for people that as they get older, that care is going to be a big issue. And I deal with that every week. I counsel families every week. I play softball on Sundays. And I saw a buddy of mine and his girlfriend of 25 years. They're not going to get married. Never wanted to get married, but it's still together. And the girlfriend is dealing with a mom who has dementia. So I said, remember I talked to you guys last year about this? They didn't do anything. And now mom is running out of money. And now all they have left is their house. So I said, at least we have the equity, but something I can help them out with because she can't watch her 24/7. She's only 66. Mother's 92, I believe. And so she paid for a caregiver. I did recommend going to an adult day center, but she's not as mobile anymore. And not a whole lot of places there, Gary, that allows um, severe dementia or mobility issues, does it?
Just a very few.
Yeah. So it is something that I think people got to seriously think about. Um, PBS did a special last year, well, caregiving. Kathy Wyatt, the lady from ARP, I keep forgetting her name, and the girl from EOA spoke about caregiving. And one of the things we found from Caucus several years ago when he did this study, when Wes Lum was in EOA, the study they did, they found that number one, there were three major things they found from their study surveys in seniors is where do we go for help? Who do we call? Who can we trust? There's a lot of nonprofits and agencies out there, but they don't know where to go. The second one was they didn't know the difference between Medicare and Medicaid.
Yep.
To this day. So whenever I do a workshop, I try to be the Medicare person with me because it's something that people don't realize that it can be complex. They need to understand, make sure they have a younger doctor. And it's something that I think more and more people are going to experience. Because a lot of doctors don't want to take Medicare. You can see more and more doctors. So when my doctor retired 2 years ago, it took me almost a year to find another doctor that I like. I had to make sure he's at least 20 years younger than me. And I found one. But yeah, because I'm 65, I figure I got another 15, 20 years. I want to make sure he's younger than me. But yeah, having a mortgage payment really caused a lot of financial stress. I'm 65. A lot of my classmates are turning 65. When I do a webinar with them, I always say, pay off your mortgage payment. You don't want a mortgage payment in retirement if they're retired. So it's really important to understand that. Why don't doctors take Medicare patients? I mean, you guys can chime in. I think I heard is a lot of paperwork. They can't spend as much time. My doctor spends about 10 to 15 minutes at least with me because he knows what I do. But most doctors 5, 8 minutes and they're out. Um, PCPs only get one class a semester, one semester of a class about geriatrics. So a lot of my clients that have ongoing health issues, I always recommend a geriatrician. They take more time. They understand your health issues. They know how to deal with rehab, where a regular PCP may not be so understanding of your needs and wants and concerns. Um, Low reimbursement. Yeah, it's not a good thing to do. So that's why my doctor retired. I have another chiropractor friend that he has to take off one extra day to do all the paperwork. Yeah. Uh, like I said, I would ask for a geriatrician if you can. They're great. It took my family 18 months to realize my mom needed a geriatrician because they didn't believe me when I told them that my mom has dementia. Finally did, and sure enough, they do. On Medicare, there's a wellness check every year now. And I heard this morning, or actually yesterday and today, my two workshops, that now they're asking about depression,
Mhm.
asking about doing it. This lady did a memory test just more 2 days ago. Lady in my workshop today said, "Yeah, they did a memory test for me. I'm only 77." Well, I think she might have a little bit of issue of understanding, but it's coming. So uh, it's something that, yeah, questions. So luckily, the PCPs that do Medicare understand uh, they need to do a little bit better work, and it's really important to make them understand um, that they need to be cognizant of their older clients. For couples, I would tell you 70% of my clients are individuals, women, husband passed away already, and I've had several situations when they were a couple. The husband wanted to make sure that mom was financially fit to stay in the home with the reverse mortgage. Um, and that's why they did it. Because they knew they wouldn't live as long as the wife, but they knew they were strained on finances. They didn't want a mortgage payment, and they just wanted their wife to enjoy the rest of their lives after he passes. I've been at funerals where I went to one funeral where the wife stood up and said, "You know what? It wasn't for Percy and my financial advisor, I don't know where I'd be today." I had another one that died 3 months afterwards, and he was because he knew he had a heart problem. It's really important to understand as we get older how to utilize home equity, whether it's a home equity line from a bank or credit union, where you have to make monthly payments if you can, versus a home equity line from the FHA government home equity conversion mortgage program. And that's really important. So when I counsel couples versus individual, I always ask that question. I say, Gary, so Leanne, so when your husband passed away, do you know how much retirement you're going to receive? Because you're going to have less income. So a lot of times, go, yeah, honey, how much am I going to get paid? Or how much carries over from your pension? And sometimes they'll say, well, remember when I retired, the pension amount was like 50% of what I got today. So we didn't have a spousal benefit. Um, and it's something that we realize today, like medical insurance, the state city workers, if they were in there before 1996, they got spousal benefit for health insurance. If you started after 96, you had to work there 10 years and it covered only half for yourself, not for your spouse. And we never thought how important health insurance is going to be, right? And it is something. So when it comes to reverse mortgage, we try to cover all these things. They want to stay in a home. I try to work through all these situations to help them understand that to live in your home, there's a lot of things got involved. Have enough money for fixing the home up, have enough cash flow, using a HELOC, whether it's a reverse mortgage or a line of credit, to be able to benefit by taking out money tax free. The funds from reverse mortgage are tax free. And so they need to understand, like this lady this morning, she said, well, I heard it's maybe better to give my kids some money now. I said, well, you have 3 kids. Only one has a home. What about your other two? Oh, it's too expensive in Hawaii. Well, that's right. So a lot of times we use the reverse mortgage or a home equity line to help them with a down payment because they got to get in the game. That's why you see so many people moving to the mainland. They can't get in the game, especially if they're single. I had lunch with a lady, a business person today, and she's single, and she says, "Yeah, I'm having a hard time because only one income." So I said, maybe your parents would look at that, help with the down payment. It's really important to understand that you got to get in the game. So I try to do an overall consultation on what's going on in their life, because I've seen so many situations recently that they have to sell the house to pay for care. Most of the people today use the reverse mortgage to pay for long-term care. I'll say 65, 70% of people use the reverse mortgage for long-term care. And a unique benefit of the reverse mortgage line of credit. So let's say you go to the bank of credit and you get maybe a $300,000 line of credit. Well, you have to qualify for the whole $300,000 mortgage payment. A lot of times you can't, especially if you're only by yourself. So the reverse mortgage, you get a line of credit based off your age, value, and interest rates. So round numbers for sake, let's say you have $1 million home, you're 70 years old, you're gonna get about 40% of the value. So on $1 million home, we can set up a line of credit for $400,000. If you're 80 years old, it's gonna be close to 50%, and so on. If you're younger, let's say 30, 62 years old, you're only getting about 34, 35% of the value of the home. So it sits in a line of credit. And to me, the biggest benefit of the reverse mortgage line of credit is that line of credit has a growth factor. In other words, let's say, Leanne, you say, I don't need the money now, but I'm worried about down the road and long-term care and this and that. So I want to set up your line of credit. I recommend you sign it up now, because the biggest benefit of the reverse mortgage line of credit, let's say you have a $400,000 line of credit. It grows every year, every month, guaranteed for the life of the loan. So you have a $400,000 line of credit and it actually grows every month, every year. In 10 years, you'll have over 500,000 in a line of credit. Guaranteed to you. The line of credit almost never goes down unless interest rates drop more than 2%. So it's not cash in the bank. All it means your borrowing power has grown. And so when I first saw that in 2002, I asked my manager that was just in town here recently, I said, why would we want to take more risk by giving them more money? And he said, it's an inflation factor. As we all get older, inflation is going to creep up. And Social Security doesn't always go up that much every year, but inflation doesn't stop. So it's an inflation factor built into the line of credit. So I tell financial advisors, that's what I do. I show them, listen, your client is going to have a $300,000 line of credit. In 10 years, it's going to be $400,000. Can your fund increase that much? So cash flow wise, and if you don't need it, don't take it. When you pass away, if you only borrowed $100,000, you only pay back $100,000. And that's how easy it is when you're looking at cash flow. A lot of people call me the ATM machine because they can take out money every month. And, so there's a document they give you every month, and you fill it out and email it in, fax it in, or mail it in, and it'll be direct deposit into your bank account within 7 to 10 business days. And so you can manage it every month. Every month you're going to get a statement. You're not going to wake up and realize I owe 300,000. How did that happen, Gary? No, it's not going to happen. Every month you get a statement, so you can manage that. I get calls every week from a past client, and for the kids especially. But the HELOC, the reverse mortgage HELOC is, to me, a godsend to seniors, because when they get older, cash flow becomes a big issue. Number 9, we're seeing quite a bit now. Condominium maintenance fees going up because of hurricane. I have literally seen 5 people get forced out and foreclosed upon, seniors in a condo, because they're back on their maintenance fees for a year. In the past, Gary, 2 or 3 years, no problem. You have a lot of equity in your home. Don't worry, we don't need the money now. Well, today's world, every association needs the funds.
Yep.
So I try to contact them and say, listen, I can help them pull some equity out, clear out that debt they owe, and still have them enough funds to pay for their increased maintenance fees down the road. And we can never foreclose upon them as long as they have paid their property tax and insurance. And it's really something that it's kind of scary if you're in a condominium today. I was having lunch with this business person lady today at noon. She said her friend bought a Kakwako condominium and it doubled the first after the first year. I said because when they bought this developer, they want to sell this place out. They're going to keep it low. So yeah, don't worry, I'll keep it down for a couple of years. Uh-uh. There's some lawsuits going on right now because of that. And it's unfortunate, but that's just the way it is. So when you're going to buy a condo or you have a condo, I tell people, look at what's on the top of the condominium. If you see a lot of things up there, that means your maintenance fee is going to be high. Air conditioning, central air, pool, all this stuff. And if you have security, it's another thing. So it's a big issue. It's something that I take pride in when I counsel families. I try to give them everything involved that they should think about down the road. And a lot of times, they hope things are not going to happen, but hope's not a plan. So I try to create some kind of a plan down the road. When I do workshops, I would tell you 9 out of 10 people say these are not golden years. They're not golden years. It's very sad. Financially helping the kids buy a property. I don't know about you, Gary, but I think 85, 90% of people don't have long-term care insurance.
It's at least that.
It's very sad. I mean, I deal with financial advisors every week, and I will tell you at least 70% say, oh, yeah, long-term care insurance is too expensive. If they think it's expensive, then of course they're going to relay it to their client, don't buy it because it's too expensive. But if with our shortage of nursing beds, CNAs, I predict in 5 to 10 years, when baby boomers start coming into long-term care, and we don't have enough Medicaid beds coming on the marketplace, I think there's gonna be a waiting list. I think it's really gonna say, "Oh, I'm sorry, Gary, but you're number 284. So be nice to your wife, have her take care of you, talk to your kids, and I'll let you know when it comes available." In the late 2000s, 2007, 2008, I don't know if you guys remember, Gary, if you're around. I don't know if Helen or Emlyn were around where they had the Graying of Hawaii documentary.
Mhm.
I have that DVD, and they had a section of that documentary about how Queens were sending people to the mainland on Medicaid. They had no beds. Not to bash Queens or anything, but they do a great job. That's my favorite place to go. They're great care, but we brought that to light, and he stopped that practice. I have the 2 people in my class today. 2 of them were nurses at Queens. I told him that story. He goes, "I was there, and yeah, we need beds. We don't have a choice." It was a glut down like 2008 to 2009 where this happened to happen. They didn't do a lot of them, but they were caught doing that. And one case, they didn't tell the family. The daughter was disabled, and it showed in the video. But it's something that we all need to understand. Emlyn, yeah, that's okay. But yeah, it's just important to understand as we get older. When I do workshops, I say, how many people smoke and drink a lot? They go, oh, no, Mr. Ihara, we don't do that. I say, oh, that's not good. That means you're not going to die right away. So having a long-term care plan, I could probably sell more long-term care insurance than most advisors. So I talk about long-term care plan in every meeting I have with a senior because it's going to happen. Very few people die of heart attacks right away. They're going to need some form of care. And so when somebody gets in a hospital and they need care, you need to make sure you talk to the case manager and they have a care plan before they get discharged from the hospital. We see it so much time. They go home and they're all flustered, right? Yeah, you guys see that? They're all flustered. They don't have bandages or they ran out. They don't know who to call. And then, Leanne, here's a list of care homes. Go ahead. You don't know where to go. You don't know where to call. Now you have more problems, more stress. And now the bells go ding, ding, ding. Okay, fire alarm, fire alarm. We got to start taking care of Gary now. We're going to come around Gary and figure out what's going on. And it is a huge problem. I can't stress it enough. I see this every week. every day sometimes about long-term care. And it's something that I know you guys, Gary, probably get at the end tail where they're in a crisis mode and need your help. But I try to pass this on earlier to be proactive versus reactive. Like two of my friends say, "Oh yeah, I put cameras in my mom's house." I say that's reactive. You have motion sensor, mom falls down, you're not there. How long can it take to get to your mom's house? 20 minutes, 15 minutes? Who's gonna call 911? You? If you see it on your phone. Like I have my cameras on my phone, I can see it, but if I look at my phone, um, but this is a serious topic, and it breaks families up, as you guys know. Um, and it doesn't have to be that way. If you start communicating with their families, I'm not a professional mediator, I'm not a psychologist, but I counsel families every day, every week about how to talk to the kids, make sure they don't fight. I tell attorneys if you have more than one heir, they should put it in a trust document that they sell it within 1 or 2 years to get rid of it, because I have families fighting over the property now. My own neighbor right next door to me, 3 girls. One girl is taking care of mom and dad, and the two sisters sued her because she had bruises on her arm. Well, she's 94 years old. She's been in bed for the last 7 years. Of course, she's gonna have bruises on her arm. Then they said, "Oh, you're stealing money out of mom's account." So I had to go to court to support her. And at the end of the day, when dad passed away, because she wanted to buy the house, the two sisters said, "No, we're not gonna let you buy the house." Very sad, very very sad. Um, it doesn't have to be that way. So we try to talk to them ahead of time, get the family involved, educate them. And as you know, sometimes the person that has the most money wants more money. You know, person that has the greatest heart will take care of mom. You know, uh, the caregiving side, as you guys know, there's so much involved. I recommend watching Tipa Snow's videos, um, and I recommend your guys' services. I think your guys' services, as people get older, to prevent fighting. You guys be the conservator or guardian, POA, as a fiduciary, because we see so much fighting. And I don't think there's many ways around it besides being proactive and getting them together and plant seeds about this is what's going to happen down the road. Hopefully not for another 2 or 3 years, but your dad could pass next year. What's the plan? I have two good friends of mine. The family not selling the house because one wants it, but the other two don't need it. I have one I saw recently. The property's been in the mom and dad's trust 20 years, and two kids live there. The third kid wants the money, but they don't want to get kicked out. The two that live there. So when I train attorneys, I try to make them understand. Sometimes they're oblivious to family fighting. They don't care. Like, oh, you guys go duke it out. I don't care. But they need to understand that document is critical. We see a situation where the successor trustee is different than the person that has power of attorney. So you have two different opinions about what to do with mom. I'll put Gary in a care home. No, Leanne said we want to go on Medicaid. Oh, we can't afford Medicaid. You got to take it out of trust. Take out of trust, we got to go through probate. Medicaid doesn't take trust anymore, revocable or irrevocable. So these kind of situations are preventable if we plan ahead. That's all I do, planning ahead. But I don't know what else. I mean, specifics of the reverse mortgage, interest rates, adjustable rates, fixed. That's for another. We did that last time, but it's so complicated. It's hard to do in this kind of time frame. But it's really about all these items here. If any of these you have a question about, you call me up, text me, email me. But it's really about, can we get all these items addressed? If you can right now, you're good. If you have some concerns, I would start thinking about it, because we don't live perfect lives. Yeah, Elan.
Okay, so I'll start with a question. I don't mean to put you on the hot seat. I have a list. I've been taking notes, and so I'm going to start with my toughest question first. And in the meantime, this will give our caregivers time to put the questions into the chat. But when might a reverse mortgage not be appropriate?
So a lot of the mortgage brokers are selling the reverse mortgage because they want to get a commission. So sometimes, if they don't do a full consultation about all these things involved, they may tell you should do it, Leanne. Take all the money out and put it in the bank. That's not a good idea. Once you take all the money out, we start calculating interest on that amount. I had a lady in Manoa. She was talking to her financial advisor at the credit union, and they took out $383,000 and put it in their safe account at the credit union. I called the credit union up saying, we're charging 4.5%, 5%. This is like 15 years ago. You're only giving her 2%. So it means she's losing money every day. If they have a lot of reserves, a lot of times, if they have long-term care insurance, they have a lot of kids or more than one, especially when one's living in a house, that might be an issue. It's really, when I counsel families, either you need money or you want money. Wanting money is I want to buy a new car, I want to travel, I want to help my kids out. Needing money is to pay for long-term care, or I need to fix the house up, or I can't afford the mortgage payment anymore. I need to get out of this. But it's just proper consultation. Wrong information. Back in the day, back before 2015, ever since then it got a little stricter, loan officers were rogue. I would go to people's houses and they were looking at a reverse mortgage and said, I heard you talk to somebody else. Yeah, let me see what he gave you. Oh, he didn't give me anything. Because they don't want the kids to see the paperwork. They don't even leave their business cards because they didn't want the kids to call them up. But it's really, if people have the funds, if they're worried about their kids dramatically, if they have long-term care insurance, they don't really need it. If they have cash flow like federal government people like GS, government civilian employees, they have good retirement, they're pretty good, pretty set. But people that live on Social Security only might be a more of a person to think about, especially when one spouse passed away. That's really critical.
Okay. So it's kind of looking at the total financial picture and seeing what other possible sources of income.
Of monthly income. Very few loan officers are trained in retirement planning. And that's kind of scary thought, because all they want to do is get rid of the mortgage payment. Not realize, like yesterday, I had a lady that got a reverse mortgage for another lender before I met her. And she's $450,000. She's 77 years old. And I said, wow, you have $2 million home. I said, but you only have one son, I hear. He said, yeah. Does he live with you? Yeah. So, when you pass away, you probably have to sell the house to pay off the reverse mortgage, because your son can't afford a $500,000, $600,000, $700,000 mortgage. Because, oh no, my plan in 5 years to make enough money, she's doing case management part-time. I want to refinance and get this mortgage, a regular mortgage payment. I said, well, okay, good. But can your son afford a $3,000 to $4,000 a month mortgage payment? No. That loan officer sold her that idea, which is, I'm telling my friends, you don't get stuck. So when we do the reverse mortgage, we give you an amortization schedule to show if you take out 100,000, 200,000, 300,000 today, what that mortgage balance potentially could be 5 to 10 to 20 years, up until you reach 100 years old. So you see the lessening of equity depending on where you live. We appreciate the house at 4% a year in Hawaii. And so a lot of times, if we're charging 6, 7%, or on a jumbo, it's 9.5%, that's more than 4% a year. So it could slowly grow faster than slower. But very few homes have I seen where the mortgage balance went over the value of the home. And when I see that, I have seen it a few times in the last 23 years, it's when they took all the money out. Because we're going to start calculating interest compounded for the next 20 years. Let's say $300,000 more in 20 years, you'll probably owe close to 600, 700,000 in 20 years. Just like a 30-year mortgage, right? If you get the 30-year mortgage, you end up paying 3 times what you started with. Yeah, same thing. But the difference is you can stay in your home for the rest of your life, guaranteed. I've done mortgages in Nevada and Arizona. in the late 2000s when the financial crisis, the subprime debacle. I've seen values go from 500 to 200,000, 150,000 in a year. And so I did 2 more reverse mortgages over there, and the mortgage balance was 200. Now the value is 150. So they called me up and said, "What do we do?" I said, "As long as you pay the property tax and homeowner insurance, you're good to go. They can never foreclose upon you."
Mm.
So he goes, "Oh, that's great. The only issue is when I die, what happens if the value is below the mortgage payment? They can walk away." These are what's called non-recourse loans. They can never owe more than the home is worth. So in other words, if you have other properties, your heirs or money in a bank account, they can't go after that. Only the sale of the home. And a new thing that's, well, I wouldn't say new thing, we never thought about it, did much of it, but if the kids want to buy back the home, they buy it back at the market value or mortgage, whichever is lower.
Mm.
So they can never owe more than the home is worth the mortgage balance. If it's worth 300,000, but you owe 400,000, you're gonna buy it back for 300,000. Yeah. So that's the unique, and that's the reason why some of the comments are the reverse mortgage has high fees.
Mm.
It's higher than a regular mortgage. We have regular mortgage closing costs, appraisal, title, escrow, origination points. The big nut, I call it, is the FHA government insurance, which is 2% of the property value. So if you have $1 million, it's $20,000 upfront, and there's also small monthly mortgage insurance. That's what guarantees they can stay in a home for the rest of their life. Guarantees it can never be foreclosed upon. Guarantees that the home equity line will grow automatically no matter what happens to the property value. And it grows by the interest rate that we charge you plus 0.5%. So right now, the line of credits are growing about 6.5, 6.7, just like a bank and credit union. The cap is 5%. So if it starts at 6.5, our cap is 11.5. A lot of banks and credit unions is 18% the cap on a line of credit adjustable rate. And so your line of credit grows by 6.5 plus half. So it'll grow at 7% a year, guaranteed to them, no matter what happens to the value. To me, I think you have to look at having more money down the road than not, and having some cash flow availability. You don't know when somebody's gonna steal your car, or you have a fire or hurricane. You just don't know what we don't live perfect lives. And it's really important to have that emergency fund. Maybe you want to fix the house up. Maybe you want to put an elevator in the house. Maybe you want to downsize. Right now, even homeowners insurance is going up for single families. We're seeing slow movement on that. Not too much, but slowly we're seeing it move up. And if you live by the ocean, good luck with that. The homeowners insurance is really high. I have a good friend of mine I golf with twice a week in the afternoon. It's triple because companies don't want to insure a house along the ocean. But yeah, it's probably best if you have specific questions or detailed questions, email me, text me, call me. You can always that's what people do.
Yeah. So, Percy, can you slide your document up and it has your contact information?
Yeah, my email, I use my personal email. I've always used for 30 years.
Well, Percy, this has been really, really good. I think that most of us don't really sit down and look at the dollars and cents of aging until we need those dollars and cents, and then
Yes.
start panicking. So this is a really great tool for the right situation.
Yeah, like I said, I work with a lot of financial advisors, so I've been educating them for the last 20 years about understanding that. And I tell horror stories where the guy went through $1 million in cash. I'll tell you my other friend who's another financial advisor said, if that financial advisor was my father's financial advisor and he went through $1 million, I would sue his butt because that's not a financial advisor. So I'll end you with this. If you have a financial advisor, so I don't know if you, Gary, heard this. So you have a financial advisor and you have Mount Everest. Okay, Gary, you ever heard this about correlation between advisor and Mount Everest?
I think so, but continue.
Okay, so let's say, Leanne, Mount Everest is the tallest peak in the world, right? Now, Do more people die going up Mount Everest or die coming down Mount Everest? Just get a ballpark guess.
I would think coming down.
Why is that?
Oh, because they've achieved their goal and they're maybe less attentive on their way down.
The fact you're right, more people die coming down Mount Everest than going up. And a major reason why is that they plan to reach the peak in life, the peak of Mount Everest. They don't plan so much coming down the hill. Plus, they might lose a Sherpa or two. They might run out of food, get sick. It's the same thing with a financial advisor. The financial advisors, for a lot of financial advisors, their goal is to reach the peak in life, which is retirement, right? They plan, they make you put in money every month, every year to get that peak in life so you can retire. No, I would say 90% of them do not plan on coming down the hill, which is long-term care. And when I find out that you have a financial advisor and he didn't try to sell you long-term care insurance, I tell him, get rid of him. He's only a financial investment guy for you. He's not an advisor. They only want to invest money, make a commission. They don't think about your life. You call for long-term care. Go call Gary. Or call somebody else. Go call Percy. They don't want to deal with that. And to me, it's an investment advisor. They're not a financial advisor because the last part of life is dealing with the finances of long-term care. And as you guys know, it's very critical. So I'm very passionate about this side of the world or this side of life because I see it all the time. And it's very sad when families fight over money or just put Gary in a care home already. He can go on Medicaid.
It happens a lot. We've seen a number of cases where the reverse mortgage really made the difference. We've had at least 3 cases where the individual had dementia and didn't even realize that they had a reverse mortgage, and it gave us access to funds to take care of them for the rest of their lives. And so it's really a fascinating tool. Most of us don't have core money that produces dividends at such a rate that it would keep up with our long-term care costs. What we do is we end up spending that core money. And once it's, like Percy said earlier, once it's down to zero, there's nothing else coming off of it. No principal and certainly no dividends. So
have you ever talked to the trust departments, Gary? First Hawaiian Bank Hawaii, the trust department. I've trained the First Hawaiian Bank Trust Department. I train a lot of the branch managers on this topic. I've done Bank Hawaii's trust department many years ago. I got to go back, but I'm slowly getting calls. But I think because you're a nonprofit, because they're handling people's money, they don't know how to handle caregiving.
Mm-hmm.
They don't know how to handle long-term care planning, placement, So that's something maybe I should bring you in one of these times when I go visit them because they don't have a clue.
Yep.
And nor do they want to. It's not their expertise.
Yeah.
Yeah, I'm more than happy to do that for you.
Sure. Are there any questions with those of you that have joined us today? Do you have any questions on reverse mortgages or just financing long-term care toward the end of life?
Yep, that's really, really important.
We have a question asking if, since a reverse mortgage is a line of credit, can more than one property be mortgaged in this manner?
Good question. No, it's only for owner-occupant. But I did do a reverse mortgage in Molokai. That was like 10 years ago. Molokai had a community of about 22 homes, I believe. They're all over $1 million. I said, wow, really? So I went to go visit a guy. I said, guy from the mainland from San Diego. I said, the only problem, Percy, is I love Molokai. My wife loves our home in San Diego. What do we do? Molokai is a second home for them. I said, well, you plan on staying in Molokai, retire here and die here? He goes, yeah, I love Molokai. But my wife likes San Diego and the house there. So he got a reverse mortgage. I got a reverse mortgage in Molokai, of all places. And the wife got a reverse mortgage on her home in San Diego. And they go back and forth. So I'm about solutions. I'm about providing options for people. And I'll never tell them what to do. I act as a fiduciary, so they make their own decisions.
Mm-hmm.
But that's why I'm cross-trained so much, and I pride myself on being able to do that. That's a good question.
Helen, you have a question for us.
Yes. A lot of my friends, because now that I'm 80, a lot of my friends say they want to live in their home and do this reverse mortgage. But after one of them dies, the other one left can't take care of the house, or the taxes, or even the caregiving. They don't realize they can't. A lot of them, because we're living longer, like even into our 90s is normal now. They can't maintain themselves. Uh, when they start looking into care homes, it's thousands of dollars a month. I mean, I think the lowest I've heard, and that's not even a nice care home, uh, are what, like these mini care homes where the Filipinos have them in their homes. They're paying even 7,000 a month, and even to come into their homes to watch over them. Again, they're looking at thousands of dollars a month.
Yeah.
And even the process to qualify for Medicaid or Medicare, and it takes months, and they're going through any kind of liquid cash. So when they realize they can't do it, they're thinking of selling their homes.
Yeah,
And
so that's why I'm talking about being proactive. We got to get them earlier so they can start planning it out.
yeah,
That's one reason why we don't give 100% of the value. Like I said, we give 35 to 50% of the value. So it always should be equity left to help pay for that care. Medicaid is a whole nother topic. So for a couple, when one spouse passes away or the husband moves into a care home, when the wife's still in the home, she can stay there for as long as she wants until she needs care. Now, obviously, we're all paying for care is always a big topic, but you got to start planning that out. You got to look at all the options you have there. Medicaid is an option, but like I said, in 5 to 10 years, I think there's gonna be a waiting list because we don't have enough beds coming on the marketplace. You know, and when you're only paying what 35 cents on a dollar, 40 cents on a dollar for Medicaid reimbursement for long-term care, it's a big issue. I was at a PABIA meeting 3 months ago. The Office on Aging from Maui, Deborah, hyphenated name, she left 3 years ago to work for USA Aging in DC. So she was at a PABIA meeting, chimed in from DC to tell us about where Office on Aging and EAD, everybody worried about the Trump cuts. So she showed us a graph of cuts coming, and the discretionary fund for Medicaid is 19%.
No.
Don't
Yes,
quote me on
things are
that.
moving.
That's going to
We're
be cut
moving.
19%. But
Yeah,
the SNAP program, the nutrition programs, I think Medicaid for long-term care and mental health insurance is going to be an issue.
it is. We're moving back toward forced facility care instead of community care. But like you said, this kind of planning needs to be done soon, needs to be done early. And there are classes that you can take that'll help you look through the planning process. So, look around and find ones and take advantage of them. Honestly, it doesn't matter if you're 70 or if you're 27. It's better if you're 27 because you have some time to really work a plan. But if you're 70 or so, that's fine. Just sit down realistically and look at your aging process and your assets and figure out how are you going to pay for it? If this happens, how are you going to pay for it?
Yeah. Helen, I would say 60, 70% of my day is doing long-term care planning. So if you have family, friends that have these kind of questions or situations, just have them call me. Tell them Helen sent me so I know. No,
Great.
really.
Well,
It
Percy,
is a
thank you
problem,
so
Helen.
much. We
It is a
really
problem.
appreciate you being with us today and
For your time.
sharing your expert and your time.
Yeah.
We appreciate it very much.
Well, thank you guys for all you guys do for the community.
Thank you.